Okay. So our fourth chapter is ethics and acceptance. Okay. Now, we are linked to a professional organization, right? That is ACCA. Okay. So, Association of Certified Chartered Accountants, right? Or Chartered Certified Accountants. And when we adhere to an organization as such, okay, or in anywhere around the world, if the people are linked to, professional associations, they are required to follow whatever the rules and regulations, whatever the code of conduct, okay, and whatever the ethics that they have laid out for them, okay, they are required to follow them. Clear?
Yeah.
Okay. And this, we can say that it is the need or root of what an ACCA is supposed to be. Clear? So if an ACCA person is not following those ethics, or if they are not following those code of conducts, then that means ACCA has the authority to take away your license. Understood?
Yes.
Okay. So it is necessary as an ACCA member that you follow all the ethical standards that are there in the ACCA. Understood?
Yeah.
Okay. And this is so that you can uphold the reputation and trustworthiness of this profession. Understood?
Yeah.
Clear? Now, in this chapter, you are going to understand what is fundamental principles of ethical behavior. That is, what are the ethics that are there in the ACCA. All right. Then you're going to discuss. Then we are going to discuss about what are the possible things that might, put that ethics in danger. That are the threats. Clear? Now, when we study about threats, we are going to study about how these threats can be mitigated. Clear?
Yeah.
Okay, that is all about this chapter. And don't go by this chapter number. It is, after a certain theory, it is completely on the possible questions upon threat. Clear? So we'll be covering both. That is the theory part of the chapter as well as the, problem part. Understood?
Yes.
Okay. Next, failure to adhere to code of conduct. So what happens if someone is not following the code of ethics that is being laid by the ACCA? First things first, it might be fine if it is a smaller issue or insignificant. Clear? And if the member has been repeating the mistakes again, or the mistakes has been significant enough to be given a suspension, then you are going to get suspended. All right. Now, the last thing that, or the worst that could happen is ACCA is going to take your membership away. That is your license away. Clear?
Yes. So it's like
Now,
which kind of mistakes?
yeah, mixed. Okay, so it depends upon how grave your mistake is. Okay, how far along you are in, not obeying the ACCA. Clear?
Okay.
Okay, it depends. It depends. It would be in a disciplinary hearing that the ACCA would decide what is to be done regarding the mistakes that you have committed. All right, mistakes of fraud, or you may say anything that all, anything that goes against ethics is taken into disciplinary hearing. Clear?
Yeah.
Okay. Now, coming on to the first topic under this, fundamental principles. This is very important. It can be asked for a 5-mark theory question. All right.
Yes.
Okay. So fundamental principle is we have a mnemonic for it, that is PCOP. Clear? PCOP is the mnemonic for fundamental principle. Understood? PCOP. Okay.
Yep.
PCOP. All right. Now,
Yeah.
what is PCOP? PCOP, we are going to start with it. First one, objectivity. Okay. Now, what is objectivity? See, objectivity is the quality of a person, okay, to not let anything influence their judgment. Understood? Okay.
Yeah.
Yeah. So that means this person or the ACCA person, he shouldn't be biased about certain things in the organization. That means if he's going to, attend a client company, he shouldn't, or his judgment shouldn't be clouded. Clear? Okay. And there shouldn't be conflicts of interest, which might, compromise his judgment. All right. And also he shouldn't be, on an undue influence of others in order to make a statement. Clear?
Yes.
Next one is professional behavior. So see, ACCA has clearly mentioned how an ACCA should be, right? Okay. So whatever rules and regulations that we have studied earlier, he should abide by that. Okay. And he should make sure that he is not dishonoring the profession that he has entered into. Understood?
Yes.
Now, professional competence in due care. See, suppose you are someone who got your ACCA qualification maybe 10 years back. Understood?
Yeah.
From that 10 years, a lot of things has changed, right? A lot of new things has come, okay? And a lot of the old things have been, taken away, right? So there are many changes and amendments in the ACCA thing. Clear?
Yeah.
So suppose a person, after being a member, he is not, looking into these things. Okay, that means he's not up to date with these things. Okay,
Yeah.
then that would mean he's not professionally competent, or he's not advancing, or he's not paying attention due care to his existing profession, right? Because he is not up to date. Okay, so he
Yeah.
can't be matched with people who pass out now. Understood?
Yeah.
Okay, hence, as a fundamental principle, ACCA tell you to, timely adapt yourself to the changes that are happening in the ACCA profession. Clear? So that means if a rule has changed, he has to look into that rule. Okay. If an IAS and IFRS has changed, he has to look into it. Clear? Okay.
Yeah.
So he must, attain and maintain all the knowledge and skill that are required to keep him up to date with the profession. Understood? Okay.
Yeah.
Clear, no?
Yeah.
Okay. So he should be professionally competent, as in he should be able to understand things that are going on now. Clear?
Yes.
Okay. And only after that can he work under this current situation. Clear, no?
Yeah.
Okay. So this is a thing. This is something that is needed, that should be done, that is compulsory. If he is not doing that, he's going to get reprimanded for it. Clear?
Yeah.
Next one, integrity. See, as an ACCA person, you must be honest. That means you mustn't lie. You mustn't do anything that conceals something. That means you must be straightforward, frank, and honest all the time. All right. So
Yes.
whenever you are dealing with a client, you should be honest and not lie. Clear? That means you can't do things that deceive people. Understood? So you must,
Yes.
keep that integrity in check. Clear?
Yeah.
Fifth and the last one is confidentiality. See, as an ACCA person, when you enter into a profession, you're going to deal with many clients, right? Especially the auditor. Okay. The auditor is going to have many clients which he is going to deal with. Clear? Okay. So this particular information that you get or collect over your clients, it should be kept confidential. That means you can't and you are not allowed to pass on your client's information to any other third party. Understood?
Yeah.
Clear? So you can't disclose any information to the third party, okay, unless you have that authority or a legal need to do so. Clear? Okay,
Yeah.
clear now? And if you have any such information which is to be brought in front of the law, okay, then it is your duty to come forward with it. Okay, otherwise you are not allowed to touch your client information. Understood?
Yes.
Touch your client's information, as in you're not allowed to disclose it to the outside world or the third parties. Clear, no?
Yeah.
Now, this is peacock. Okay, this is peacock. That is professional behavior, integrity, confidentiality, objectivity, and professional competence and due care. Okay, this is peacock. Okay, so anything that
Fundamental.
ending, yes.
Yes. Fundamental
Okay,
principle. Peacock.
fundamental principles, right? So
Yeah.
anything that endangers this is a threat. Clear? That means anything that create a hindrance so as to not follow these principles are called the threats. Clear? Clear now?
Yeah.
Okay.
Yes.
And threats are something that needs to be eliminated. All right.
Yeah.
Okay. And you have two things that you can take with threat: either eliminate the threat or lessen its impact. Clear?
Yeah.
Okay. And this particular action that you take so that this threat can be avoided or reduced is called as safeguards. Clear?
Yeah.
Okay, so safeguards are the measures or actions that you take in order to mitigate the threat or reduce it. Clear now?
Yes.
Now, important thing. When we say threats, threats are into different types. Clear?
Yeah.
And that threat has a mnemonic for it, that is ISAP. Clear?
Yeah.
Okay, so fundamental principles is speak up and threats are ISAP. Clear?
Yes.
Okay. For ISAF, I starts for intimidation. I can be wrong in my spellings, okay.
No, it's
I'm
correct.
partly dyslexic. And S is self-review. Okay, self-interest. A is advocacy. Okay, and F is familiarity. Clear?
Yes.
So like that, there are 5 threats. Clear? ISAP. We call it ISAP. Clear, no?
Yes.
Okay, now we are looking into each one by one. All right. First one
Yep.
is self-interest. Okay, so whatever I am telling now is completely up to the auditor perspective. Okay, so if you are an auditor, if you commit self-interest, if you have or if you are prone to self-interest threat, you have to take safeguards. If you are an auditor and you are prone to self-review threat, you have to take a safeguard. Clear?
Yeah.
Okay. First one, self-interest. Okay. Suppose you have a client. All right, you have a client, and upon accepting that client, you're going to cloud your judgment, that is, you're going to compromise your objectivity. Okay, because you gain some financial interest from that particular client. Clear? So that type of threat is called self-interest threat. Understood?
Yeah.
Coming up, so what are the self-interest that are there? First one, owning shares. Okay, suppose you have client shares with you. That is, you have bought client shares long before and you still have it. That means it is going to cloud your judgment, right? So while you audit, if there is anything that is of notice, you won't say, because saying that or disclosing that would harm the company. Clear?
Yeah.
And that is a self-interest threat, because you feel that way, you're not going to give a correct verdict. That means your objectivity would always be compromised. Understood?
Yep.
Next is fee dependency. Okay, so suppose your client has, there is a client A. Okay, and that client is someone who gives, more than 50% of your fees. That is, that client is someone who gives you the fees that is more than 50% of your total earnings. Suppose it is that way. Okay, that
Yeah.
means you don't want to upset that client, right?
Yeah.
So whenever there is any mistakes that fall upon the FS, you're going to turn a blind eye. Okay, because you're scared, okay, or you're worried that this client might not opt us again and we would lose that revenue. Understood?
Yeah.
So fee dependency is a self-interest threat. Clear? Clear now?
Okay. Yeah.
Next is gift and hospitality. Suppose your client is giving you expensive gifts. Okay, the client is giving you, something that you can't otherwise buy. All right. So, in the fear of losing those things, you might not give a correct verdict of what your client's FS truly stands for. Clear?
Yeah.
Okay, next is loan. Suppose your client is a bank or financial institution and you have got loan from that client. Okay, so in order to
Yeah.
not anger the client, you might turn a blind eye over the misstatements that has been found. Clear? That have been
Yeah.
found. Good. Now, next is business and personal relationship. Suppose you buy goods from your client, okay? You need some, furniture and stuff, and you buy that from your client, and you are a regular customer to your client. So when you're going to accept that client, okay, you're going to have a personal relationship, right? Because you get so many discounts from them, okay? So you are actually intimidated to not disclose their true and fair view of the FS. Clear?
Yeah.
That means even if there are misstatements, you're going to turn a blind eye. So that is a self-interest threat. What is a self-interest? How, if a person has a self-interest character, how do we say that? Self-interest means he's bothered about nothing else but yourself, right?
Yeah.
Okay, same way here, the business, the audit firm is not bothered about anything but their own company. Clear?
Okay.
And if they deal the clients that way, then they are going to always not, adopt the true audit strategies in order to deal with the client. That means if there is misstatements, they are going to turn a blind eye. If the client is not providing anything, any information that are needed by the auditor, the auditor is not going to make a fuss of it. Clear? So that means in
Yeah.
as a whole, in order to not lose something or some benefits that they receive from the client, they are going to compromise their objectivity. All right, clear? Now as
Hello.
employment with the client, suppose the auditor who's doing the audit, okay, has previously worked with the client. Clear? That means he was a member, he was, or he has a potential job with the client. Okay, suppose the client has said that in 2 years you're going to become a finance director. Understood?
Yeah.
Now, what does this do to the auditor? The auditor is going to, have self-interest threat because he's going to compromise his objectivity, okay? And he's going to turn a blind eye over the mistakes that are there in the FS, right? Because if he does not do that, he does not get the job. Understood?
Yeah.
Next is overdue fees. Suppose you have a client, all right, and that particular client owes you some money. That means over the years they haven't, actually and fully paid their fee to you. Clear? So in that case, okay, you might fear that this particular client is going to, not pay your fees again. Okay, that means it's going to be, bad debt. Okay, so in the fear of that from happening, you might, compromise your objectivity and not look into the FS properly. Understood?
Yep.
Next is contingency fee. So see, when I say contingency fee, it is actually a future fee. Understood?
Yes.
Okay. And this future fee would be dependent on some clause or case. Clear? Okay. So
Yeah.
the client is going to say if the profit is increased beyond, maybe 150,000, we are going to pay you double. Clear? The client is
Yeah.
going to say that to the auditor. Then in that case, the auditor is in a way dependent on the fee, right? Because if the auditor is going to turn a blind eye over the FS and the profit exceeds that amount, he is going to get money. Clear? So
Yeah.
in that way, he is going to compromise his objectivity. Clear, no?
Yeah.
Next one is litigation with the client. Okay. Suppose the auditor is running over, or currently the auditor has some suit again with the client. Okay. Suppose that is the case. So in order to not, get an unfavorable verdict, the auditor is going to, turn a blind eye over the FS of the client. Clear?
Yeah.
Understood, no?
Yeah.
Okay. Do one thing, just read them, all right? Okay. So if there is speak off and anything that threatens speak off is the threats, okay? And anything, any measure that is taken in order to, mitigate that threat, okay? Or actions or measures that is taken to mitigate or reduce that threat is safeguards, right? Okay.
Yes.
And you have so many options or examples here how a self-interest threat would come. All right. Now we are
Yeah.
going to look into it. First one, self-interest threat. Okay.
Yeah.
Let's, before that, see in the exam, but I think since 3 to 4 years, they haven't actually asked threat and safeguards, but you never know how they're going to ask questions, all right? So to be on the safer side, you're going to, learn how a threat is identified, how it is written, and how a safeguard is provided for that. Clear?
Yeah.
So when a question comes from this chapter or from this area, you're going to have two columns, okay? And this would be, pre-prepared or pre-populated by the ACCA itself, okay? And you would have two columns under that. It's threat and safeguards. Clear?
Yeah.
And you would be given a scenario where so many threats would be there, okay? And you have to identify those threats and write it in your answer. Understood? No? Okay.
No, I don't get it. What I have to do in exam?
Yeah, this is what it's asked for the exam, and it has been asked for 3 to 4 years, but you never know when they're going to bring this back. Clear?
Okay. Yeah.
So to be on the safer side, I have always, prepared my students for this question as well. Okay, and they have found it because this one is sure for MCQs. All right, it is going to be there for MCQs for sure. Okay, so even if you study like this, it is beneficial for you because you can answer them in MCQs. Understood?
Yeah.
Okay. So previously, I have made my students prepare for this as well because you never know how ACCA is going to change the questions and ask you, right? They can
Yep.
always ask anything that you haven't studied. Okay, there is always a chance of that. Okay, so in order to be on the safer side, we are going to study this as it is that have been asking for many years prior to that. Clear?
Yeah.
Okay, so they would provide you with two columns, that is threats and safeguards. Clear? Okay, and
Yes.
there would be a question, a scenario attached to this particular part of the answer. Okay.
Yeah.
So you would have your screen, suppose this is your ACCA examination screen, okay? They would,
Yeah.
divide the screen into two parts, okay? So
Yeah.
here you're going to have your scenario, clear?
Yes, exactly. Yeah.
Okay? And this part, they're going to split it into two. And in this area, they would have the question, clear?
Yeah.
And this is your answer part. Okay, and this answer part would be pre-populated. That means it would have rows and columns. Understood?
Yeah.
Okay. Otherwise, if they ask for maybe some theory question, they would simply give you a word pad. That's all. Clear?
Yep.
Okay. Now, like I said, in threats, you're going to have a pre-populated word pad with two columns, threats and safeguards. All right. And how do you write this? For the threat column, the marks would be split as 1 plus 1. That is 2 marks for each threat. Clear? One threat and one safeguard, you get 2 marks. Understood, Hasib?
Yes.
Okay. For threats, first of all, you're going to write the heading. Okay, which threat that is. I
Yes.
mean, which topic on the thread that is. Topic. You're going to write the topic or heading. Second, you're going to copy paste. That would be from the scenario.
Yeah.
Understood? Third one, you're going to describe what actually is happening in the company. Okay, it would be the scenario would be about a company, right? So you're going to
Yeah.
describe what is there in the C plus B, that is copy paste. Clear?
Yeah.
Now, the fourth thing you have to do is you have to write this sentence. That is, whatever is happening there is going to compromise independence, okay, plus which among the peacock. Clear? That means that particular threat is going to harm which peacock. Clear?
Yep.
Okay, so what peacock would be, not abided or not followed if you're going to commit that threat. Understood?
Yeah.
You write this much and you score 1 mark. Clear?
Yes.
And often students made a mistake where they have just found given the heading and they have just copy pasted the scenario and they have completely omitted these two things. Clear? In that case, you're going to get half mark. Clear?
Okay.
Understood? No?
Yes.
Okay. So don't be that people. All right.
Yep.
In the safeguard, for one valid safeguard, you're going to get 1 mark. Clear?
Yes.
Okay. So when you give one mitigation measure, you're going to get or credited for 1 mark. Clear? So total 2 marks. Understood?
Yes.
Okay. Take a screenshot and keep it there. So, okay.
Yep.
And the maximum they would ask you can be for 6 months under threat, if at all they are going to ask you. That means you have to have identify 3 threats and 3 safeguards. Understood?
Yes.
Okay, no?
Yep.
Now, like I told you, since 3 to 4 years, 3 years, it hasn't been asked. Okay, so it would be there in the MCQs. In the MCQs, there will be a question as on which threat has been identified. All right, or which scenario is there. Okay, the question would have a case. All right, and in the options, you're going to select which threat and which safeguard you're going to opt. Clear? And the 4 options would look the same. Clear?
Yeah.
Okay. So I always tell my students to attempt, part B first and then go to part A. Because part A, when you opt the wrong answer, it is wrong. Okay, you're not going to get awarded for that. Okay. But when you attempt part B and you write something that they're going to give you marks for that. Clear?
Yes.
So I always tell my students to attempt part B first and then go to part A. Clear?
Yeah.
Okay. Now we are going to, look into self-interest threat. Okay. So like we said, we have got, we would take 3 today and the rest tomorrow. All right. First of all,
Yeah.
fee dependence. Okay. So fee dependence is when your client owes you a large proportion of the fees that you owe, that you get in total from all the clients on an aggregate basis. Okay. For example, your client is A Limited, B Limited, okay, and C Limited, okay,
Yeah.
and you get a total of, let's just say, 5 million pounds, dollars every year, all right, and that from that $5 million, this particular company, let's suppose they pay $3 million, right? So what is the problem here? Majority of our fees we get is from A Limited, right?
Yeah.
Okay. So this would create a self-interest threat. Understood? Okay. So
Can you
when the threat
explain it
is
once
upon,
again?
yes. See, A Limited is our client. Okay. And
Yes.
they
Yeah.
owe most part of our total revenue, right?
Yeah. Yeah.
So a large proportion of our fee is dependent on whom? A.
Yes.
Clear?
Yes. Yes. Yes.
Okay. And this would create a self-interest threat. Okay. Because we are over independent on a particular client than any other client, right?
Yes.
Okay, so if the if the client need any adjustments to the FS, or if there is any misstatements to the FS, in the fear that this particular client might not opt our company for the future audits, we might not, take it into consideration. That means their misstatements, their mistakes, their, the adjustments that are needed in the FS, we are going to turn a blind eye over it. Clear?
Yes.
Okay. Now, in order to evaluate this threat, we need to make sure certain things are taken under consideration. First is what the firm operates, or on what the firm operates. Okay, that is the operating structure of the firm, how the firm operates. Clear?
Yeah.
Okay, that is our firm. All right. That is the audit firm. Okay, how the audit firm works. Okay, whether we are giving just audit services, or we are giving consultancy services along with it. Clear?
Yeah.
Now you must understand this basic thing. When you're an audit firm, okay, you provide two services. Okay, audit and non-audit services. Clear?
Yeah.
Audit services are conducting audits. Clear? Non-audit services are providing accountancy services, providing tax consultations. Clear? So these are not, like the audit work that we do, right?
Yeah.
So these are called non-audit services. Okay, so you have to make sure how much of audit services being done, how much of non-audit services done, in order to understand the operating structure of the firm. Clear?
Yeah.
The next thing that you do is you have to when ascertaining, or when assessing the threat, you have to understand whether the firm is well established or a new firm. Clear? Okay,
Yeah.
so if it is a new firm, it is possible that you have just one client, right?
Yeah.
And you get all your fees from that client. Okay, so that fee dependency is not, you can't avoid that, because you have newly started and you just have one client. You can't say no to that client, right?
Yeah.
Okay, that is called as that is why we look into the fact that whether the firm is new or not. Clear?
Yeah.
Next one is significance of the client to the firm, on how significant the client is to the firm. That means if the client holds a special, hold over the firm, okay, or if the client is not well so established with the firm. Understood? Okay. So you must
Yeah.
understand, while writing safeguards, we divide companies into two categories. Clear? Most of the safeguards, not most of them, maybe a 50%, or a 30% of the safeguard would divide the company into two categories. Clear?
Yeah.
One is non-listed or unlisted, and the other is listed. Clear? So
Yeah.
listed clients are the companies who have legally registered into the stock market. That means the shares are being traded in the stock markets. Clear? Non-listed
Yeah.
means they have not registered themselves in the stock market. Okay, their shares are not there in the public. Okay, or their shares are not traded publicly in the stock market. Clear?
Yeah.
Okay, just a moment, just a moment. Okay, so for non-listed client, what do we do, or what is the safeguard that we take? Okay. Okay, so for non-listed client, okay, suppose the fee is a substantial part. The audit fee is a substantial part, as in it is a significant amount. Clear?
Yes.
Then they have to expand their client base. That means they have to do, all the proportional activities in order to attract more clients, okay, and make it in a way that they get the same revenue or more than the same revenue from other clients as well. Clear?
Yeah.
Okay, so first safeguard is expanding their client base, and the second safeguard is getting an independent reviewer to assess the work. See, an independent reviewer can be anyone. That is, see, I must talk from the basics as well. Audit firm does the audit work, right?
Yeah.
This audit firm would have different audit teams which would take over different clients. Clear?
Yeah.
Suppose audit team A has done audit for C limited client, and they are the client who gives us majority of the revenue. Clear?
Yeah.
Then, as a safeguard, maybe someone from team C would, look towards all the audit activities done by A in order to make sure it has been provided in accordance with the ethics and conduct of the ACCA. Clear?
Yeah.
And that particular person is called the independent reviewer. Okay?
Yeah.
Clear? And this independent reviewer can be someone from different team, or for an audit firm, they can actually hire someone from outside, especially to conduct the review. Understood?
Yeah.
Okay. Now, for listed clients, okay, the rule is that, or the safeguard is that, they should not get the fees that is 15 above 15 percentage of their total revenue. Clear?
Yeah.
Okay. So if A limited has more than 15 percentage of the revenue that is there for the audit firm, then the audit firm shouldn't, take A, or the audit firm should lessen the fees. Understood?
Yeah.
Okay. Now, if this particular 15 percentage mark is, increased, or, has passed, okay, since 2 years, okay, then the audit firm is required to report that under corporate governance. Clear?
Yeah.
And after this, an independent review should be taken. Okay, independent review as in the same thing that we discussed previously. Okay, and this should be done either before, publishing the audit report, or post publishing the audit report. Clear? Based on the fee levels and the based on the fee levels that is collected. Okay, and this is so that all along the audit, independence is maintained. Clear?
Yeah.
So much to study, right?
Yeah.
In a single thing. Okay, so this is your, this is from where your complexity to double A starts. Clear?
Yeah.
Until now, the 3 chapters were easy. They were not so much.
Yeah.
Okay,
Now
from
it's
here on,
pretty
you
complex.
have to think. Yes,
Yes.
from here on, you
No.
have to think. You have to apply your knowledge. Understood?
Yeah.
Okay. So this is all about fee dependency. What is fee dependency? Okay. And how does it, affect our independence and objectivity? All right. And here we have, in the safeguards, we have divided into 2 groups, that is non-listed and listed clients. Okay. And non-listed would have a separate safeguard, and listed would have a separate safeguard. Understood?
Yeah.
Okay. Next one, gifts and hospitality. So gifts and hospitality is such that your audit client is giving you some gift, okay, and services, or you know, hospitality when you reach the client location. Clear?
Yeah.
And in this case, it would create a self-interest threat, okay, as well as intimidation threat. Intimidation threat, that means you are, in the fear of losing the client, you would do anything in order to please the client. So that is intimidation, okay. And if
Yeah.
you accept gift and hospitality from the client, you're going to have a familiarity threat. That means you know very well how your client is, right? See, if
Yeah.
someone gives you something, what do? You maintain a good relationship with them, right?
Yeah.
So this alone, that is the gifts and hospitality alone, would have 3 threats coming under it. Clear? One is self-interest, intimidation, and familiarity. Clear?
Yes.
Okay. And when we are, when someone gives us, we are inclined to show courtesy towards us, right?
Yeah.
And that feeling is called being indebted. Understood? So always and always, if the client company is going to give you gifts and hospitality, you're going to be indebted towards the client. Understood?
Yeah.
Now, what is the hospitality? What is the safeguard? See, if the client gives you his gift or hospitality, or treats you well, okay, you're going to assess whether or not it is a substantial amount. Clear? If it is a substantial amount, or if it is a significant amount, or if it is, too high of a value, you're going to refuse that particular treatment. Clear? That means you're going to refuse the gift, you're going to refuse the hospitality. Understood?
Yes.
But if it is something very trivial, okay, or if it is something that is not so important, okay, that is normal, you're going to accept it, no problem. Clear?
Yeah.
Understood? But
Yes.
suppose they are trivial, okay, and they are inconsequential, that means they are not happening from time to time again and again, okay, but this particular thing would cloud your judgment, then you can't accept it. Understood?
Yeah.
That is the rule. Two rules, okay, or two safeguards. One is you have to look towards the value of the gift. If it is very trivial, if it is not, reoccurring, you can accept that thing. The second one is that if it is trivial, if it is inconsequential, but it is going to cloud your judgment, you can't accept it. Understood?
Yes.
Okay. Next one, owning shares or financial interest. Suppose from your client company, you have bought shares, okay, or loan notes, or okay, or something that is of value from the client company, or any financial instruments. Clear?
Yep.
Then this would always and always create a self-interest threat, because you would always fear that you won't get the returns from the company if anything happens, right? Why do you
Yeah.
buy shares? Why do you buy shares? In order to get returns, right? That means you
Yes.
must get dividends for it. Clear?
Yeah.
So if the auditor is going to own, or if the auditor is owning some shares or any other financial interest in the other company, okay, then they would be in a constant fear of not getting the returns, right?
Yeah.
Right? And this would lead to him compromising his objectivity, because he fear that he won't get the return. So he is going to, not adjust the financial statements which are needed, and he's going to turn a blind eye over it. Understood?
Yes.
This particular threat is known as owning shares, or and it leads to it leads to self-interest threat. Clear? And what are the factors that is taken into consideration while assessing this threat? One is holder's identity. That means whoever owns that shares, what role does he have in the audit team? Understood?
Yeah.
Okay. Whether it is direct or indirect financial interest. That would be the other thing that you note into, that you look into. Understood?
Yes.
Okay. So if you own a share that is direct or material indirect financial interest, first of all, you are prohibited from the firm. Clear?
Yeah.
That means you can't take on that client company or that client company's acquaintances. Clear? Or you can't, have a proximity relationship with the audit team members who are attending that client. Okay. Or you can't have a personal relationship or any kind of contact with the partners involved in that particular audit. Clear?
Yeah.
Understood?
Yeah.
Now, another example, all right? If there is suppose you know what is owning shares, right? What do you mean by financial interest? Suppose your immediate family member, okay, owns a share in that company. That means it would create a financial interest to you, because your son is owning shares. Clear? Or your
Yeah.
daughter is owning shares, or your wife is owning shares. Clear? Understood?
Yeah. Yeah.
Or your wife would get pension from that particular company. Clear?
Yeah.
So if this is the case, you must and you have to take that client. Suppose you intend on taking that client. Then the first thing that you do is you're going to dispose of that particular shares, pension, or anything of financial interest promptly. You're going to say to the company, you're going to ask of that particular member to dispose of that shares or financial interest. Understood?
Yeah.
Okay. Or if you're an auditor and you hold a share in that company, the first thing that you do is you're going to dispose of that shares and then join the audit team. Understood?
Yeah.
Okay. Now, suppose your close friend or family member holds that interest. Okay. Then you are not allowed to do the audit of that particular client company until that friend or family member disposes of that share. Understood?
Yep.
Okay. And this is followed by a independent review of the work that is done by that particular auditor. Understood?
Yeah.
Okay. So we would stop here. All right.